What's going on YouTube? Time for another recap. So let's jump right into it and what happened today. So we snaked out a nice little $1,200 green day here. Let's talk a little bit about the day trades that we took. So we had a couple different fibs we've been paying very close attention to. And if you look at the screen, we have a 50% Fibonacci. This comes from the engulfing 2 week ago weekly candle, right? So right here is the 50% fib, okay? So I drew this little box here before I left my team on live trading, and I said, well, as long as it holds this little box, we will be getting a long play. If we are over, which is this red dash line right here, the 50 SMA daily, and I made a channel with the 50 SMA daily, right, and the 50 Fibonacci of the weekly. So as long as it holds there, we're good, right? We'll get a opportunity to go up. We had a inverted head and shoulder on the 5 minute right here, right? Really good divergence RSI. Good on the TTM. Finally got the cross. We had a fake cross right here. A little bit later on in the day. Came back down to the 200 SMA. Started creating more divergence here after about 10 a.m. On this RSI here. So after 10 a.m., this was looking really good. And same with the TTM. Also with the recross and growth after about 10:30 on the MAC, so US Central, that took off rather well. So you might be wondering where I get that Fibonacci from first, so I can take a peek at this. And it's the neon blue one, which we're worried about the most right here. And of course, it's just 2 week ago's candle. So for now, this candle right here is 828, okay? So if you notice, 828's candle here created it engulfing. Here's your open and close. Inside here, open, close, right? So candle 1, 2 is engulfed. 3 is starting engulfed. So this first engulfing weekly candle is one you want to fib out and then use your weekly candles Fibonacci inside the intraday, right, to place your trades. So that's where we got that 50 SMA and 50% retracement Fibonacci. So moving averages are pretty spread right here, but we're getting pushed up pretty good into resistance. Now, these are the two scenarios. We'll go over the two scenarios in a second. We'll go for the day trades. Let's finish this off first. So we made a couple of long and short plays here. So we started a gap up, okay? Likelihood of another gap up and push was very short-lived because we have a gap right here that is unfilled right above us. So what happened last time we seen that on the daily chart, this is a very common pattern where we will do a gap down, and the first initial gap tag of that gap down is a rejection. No ifs, ands, or buts about it. So that last scenario play out right here, we'll go over. So if you guys remember this gap right here, there's that long box channel we got, and that was a gap and go, right? A gap down, price action flew all the way down. We shied. This is where we called our big W play. Said it was going to go long if we didn't go back down to the 100. Once it mounted the 10 and 50, we were gone all the way back up, right? So here's the gap. What did it do? Tagged here, okay? 831, 91, one of those two. So right here is the gap tag and fail, right? So same exact scenario played out. We never really fill those gaps. First gap and go, tag back. So if we gap and go to the downside, we start traveling back up in price action. We hit that gap. It does not go to the fill, okay? Algos hate that. So we come into this gap down, which is another near term, okay? So we're looking at the candle between 9.5 and 9.6. There's a gap right there. So what's the gap tag do? Usually fails. So here's the gap. Here's the tag. And that was the early morning wash, right? Because we're also in a gap up. So we will double gapped this morning. So as we see the price action push up into that gap, back to the 5 minute here, we had a pop to short from the deviation center. So this is a standard deviation daily regression trend. So the center of a standard deviation. So once that pushed back up and fell, well, that's when we got our nice walk down, inverted head and shoulder channel we had just talked about, 200 SMA 5 minute catch up, so on and so forth. So we gave you a couple instances there. Now, let's talk about a little bit of the worrisome positionals here. We did take another long, obviously, later there, pushing back up. When we move into the 30-30, we're starting to see a pattern here of pushing against resistance, right? And it's no surprise that we are kind of loomed by seller volume. And when we do get instances like this, where we push into one gap up here and fail it, create another gap down, it's right here. This morning on 30-30, pushed up, started to fail it. A lot of the time, and we are leading into CPI on Wednesday, when huge data is looming, we'll get a lot of false metrics, unfortunately. So a really loomingly hard trading period. So we lost our standard deviation +1 right here. We tagged that a couple times too in the 30-30, right? standard deviation, half in between, and center are way down here yet. So we have this beautiful inverted head and shoulder on the 30 as well. And usually that distance between head tip and neck is what you want to look for the long. So if this is the head, we bring it back to the neckline, which is essentially right here. And then we activate that drawing. We can drag it up to the neckline because we got the distance between head and neck. We put it right back on the neck right here. So it had an opportunity to go long upwards towards 449. So potential gap fill on the inverted head and shoulder potential. Now, leading into a day-to-day like CPI, and obviously we got to see some what jobs do and so on and so forth, we may not be just attacking this gap quite yet. So this is that unfilled gap and the standard deviation +1 on the 30-30 with the center regression trend, which we had failed this morning. All those resistance points are coming in overhead with really just a lot of seller volume. Now, CPI days can do whatever we want. If we decide to force up from here, that one scenario where if we do go long, we will be forcing against resistance, right? So what's that going to try to do? It's going to try to swap the standard deviation to the upside. We talked about this inadvertently when we were getting pressed down back here a couple weeks back from the first gap tag, right? So, or the gap down. Here's the gap down. Then we just had day after day after day after perfect downtrend. And what happened there was the standard deviation was actually pointed upside. So all of these price action movements down were pushing into the support standard deviations, right? So 1 and 2, and they were hitting supports on that deviation along with our fibs and so on and so forth, which use are intraday. But if that happens again, that's going to be dependent on CPI and how the market takes it. Now, the only bad part is we are in a double gap down trend to gap and go start scenario. So if we start to sell into this lower high setup and we don't maintain above the 50 and 10 SMAs here on the daily moving average, well, we're going to come back down. If not, we're going to be just fine. We'll open up, most likely fill that gap, consolidate CPI into Wednesday, and then fly all the way back up here for a higher high. Well, what would that do? That would complete trend, right? So let's look at our oscillation indicators on the daily. We are still surrounded by buyer volume, right? This guy right here, big buy up off of 825, tall candle. We are in the top channel and attempting to stay in the top channel of our RSI. We have a good bright blue MAC and a little green start on the MACD histogram. Now, if we do happen to get that oscillation in, we stay above the 0 line on the MAC, we stay above the 50 line on the RSI, we are getting more oscillation indication that we are getting upside potential. We have the volume for it and we have the setup for it. Now, that little break into the bottom is a little scary. Let's take a peek at what happened the last few times here where we had dipped down to the channel here in SPY. Price action was here in consolidation. Boom, higher high. Price action dipped down to the bottom RSI. That was almost a hot day. Came back up here, consolidation above, right? This is in the top 50 portion of the RSI, right? So don't forget that. Into another hot, right? So higher high right here. Okay, perfect. Another hot, okay, right here, higher high. And then we have another drip back down. Now this is the last, or third in a row here. Last time we came down this far in a while. So the last couple times we had dipped, we did slingshot right back up on those oscillation markers. And predominantly we could do that again. MAC is also very similar to this. Right here with very short periods of time spent in the negative range of that MACD, way more spent in the positive range on the MACD. That is a trend, right? So if that happens to hold true, we start to pick back up, well, we're still golden. Now, we may have to wait till CPI for that. We may get one of those CPI run-ups. I don't know how clean that is going to be because we are into max resistance, right? So it's the market's job now to push up against our standard deviations if it wants this Wednesday CPI blowout to higher high push, or are we going to finally come back down and start filling the other side gaps that we have on SPY because we do have a metric ton of them. So give it to a little cleaner of a chart here. So not only do we have a lot of gaps on the way back down, just look at a lot of these for potential roll. And right now, I still think we're dominantly in uptrend right now. We did break a little bit of a trend up here, but in all reality, we can reconsolidate that and head right back up at any point in time. So if you're looking at some of the earliest gaps to fill here, you still have this one, 420s, mid here. We still have one here on the SPY. We still have gaps from COVID, my friends. We still have gaps here. And the list goes on. So if you're looking at all these other gaps, if we start to turn to the downside, we're going to start magneting these after the 100 EMA. So let's say CPI is bad. We get the lower high confirmation for whatever reason. We hit this gap resistance here because we have another one here. So let's say we don't even get it up there. Gap 1 here, gap 2 here. We can't get over gap 2. Let's say it's a short day, comes into CPI, we get slammed down. Well, 100 EMA is going to be number one. If it panics that, it's going to be number two, 200. And we're going to end up into that mid 420s gap, and that would be a big target short one. I'm not really looking at that quite yet because there's obviously no confirmation of that. We are in an uptrend. We are still up. We are still in the oscillations. So I'm further looking at more of a gap tag fill here, kind of a consolidation push through into a CPI. And that might even be like a false kind of down and then gets picked up, continuing. And the way Powell and how we're going to narrate this, we'll have to see. But as we move into those gap tags and gap hits, that's literally it. That's the whole premises. So Wednesday, when CPI kicks in, we're going to have to see if we stay above the 10 and 50 SMAs, right? So here's your 10, here's your 50. Those from the daily chart are going to be the numero uno. That is going to be the bread and butter. If we stay hot on those as support, we will maintenance above the regression center trend here on the daily standard deviation and head up. Now, this is anybody's game in a CPI, so this is not one that will be gambling. But right now, we do have that nice little edge rising, right? We broke through the moving averages, did a loop, and a lot of the time we can maintain above this for a little bit. Let's see where we're going. Let's get the weekly chart one last time here. If you do notice, we are holding trend above that 10 SMA on the weekly. So this is my secondary option here. So if we do see pullback here, and if this is the bigger start to a pullback, let me throw my 50 on here for the weekly RSI. We're going to get something that looks like a divergence plate on the weekly. So weekly's obviously lagged. Oscillation indicators are obviously lagged. So if this turns into that lower high back down to the halfway point here on the weekly, which we are above on the daily, and this cross right here on the MAC comes down, and we even got a hot right here on the RSI for the weekly into a deviation +1. Very rarely do we get out of that. So what happens? Well, we're still in the month of September, right? Still extreme volatility. So let's say CPI does in fact crack us down for the rest of the week, and we get Tuesday as like another inside day. Remember, we're waiting for this weekly double engulfing to play out. It's all about this candle right here, right? So we are engulfing. So we're starting that week again. I would say above the 10 SMA right now on the weekly, and if it attempts to go a little bit higher there into CPI, and then if CPI drops it, well, so be it. Utilize your tag, and then when we come to Friday, which is our next time cycle, we're going to be very dependent on what that shows us as well, because it doesn't necessarily mean we're overly negatively bearish. It means that we can have a pretty righteous pullback here from close to all-time highs. And that's what we were calling right here for this inverted head and shoulder. Once our rising wedge failure head broke from the higher low area here, I'm like, oh, okay, not bad at all. We got a volume beat. We are mounted with a higher high in the RSI, and then we just followed it long. 17 weeks. So it's been going pretty simple from that. Now, this double engulfing weekly does pose a little bit of a problem. The 10 SMA weekly, something you're going to want to watch on trend. And if we lose either of those on a kind of mucky trend that we have right now, let's just say tomorrow's trading is boogers and it just goes in between 10 and 50 and does a whole lot of nothing. Then CPI day comes and has some kind of crazy volatility. Well, then we get more there. Unfortunately, it's a dead day today, but we did get a couple of those cool day trades, and that is pretty much it for prediction. So tune in tomorrow. We'll see what happens here. We'll see if we can maintain that 10 and 50 and at least progress a little bit higher into that gap, maybe double top and sit. We shall see if we dump it out overnight. Also, we shall see, but we're going to lean to the bullish side for now until she breaks, improves otherwise underneath the 50 SMA daily. We'll see you on the next.